Hello traders, it's Samurai Trader here. In today's recap, we'll be having a look at some trade setups on the Dow, the YM. During the main market hours, when I trade the Dow, the YM, which is, for those that are new to the YM, it's $5 per point, or even some people call it a tick, but a point in the tick on the Dow is exactly the same. It's $5. I like to trade the 89 tick chart and the 4 range. I tend to find that the Dow can be quite whippy in comparison to, say, the NQ or the E-minis. But one thing that I do love, particularly with my style of trading, I like to see some good solid trends, and at times we can see the ES, we're fairly, and particularly because it's the main market that's traded, we're fairly low trends or much smaller trends in comparison to what we might have on the YM and on the NQ. So we'll be having a look at that. One thing, I've had a number of emails that I'd like to mention in relation, what about when the main market closes? What about when Chicago closes, New York, so after 4:30 over there, what do we then trade? Can we still trade futures? Well, absolutely. Yes, I think the market's closed. I think it's for exactly 1 hour, but then you have Globex, the after hours markets opens up. The volume is only probably about 10%, 15% throughout the day. However, for those people on the east and west coast, and even Europe, particularly Europe later on in the day, there's still some fantastic trading opportunities. On the after hours market, when I'm trading the YM, I like, and also the NQ, I should point out, I like to trade a 55 tick chart. You've got much lower volume. Of course, your trends, unless there's some major news announcement, you've got a much smaller trends. But the 55 tick on both of those tends to work really well. Now you can execute quite comfortably 1 to 10 contracts without any issues. At 10 you might get some slippage of a couple of ticks. They're things that you've just got to really have a look at. What sort of market orders or limit orders, what sort of order are you using to enter the market, and of course to exit. Now on the ES, the E-minis, I like to trade the 144 tick chart. I tend to find that there's still some great trading opportunities on the E-minis, and in some ways, traders, I even like the E-minis, the S&P after hours more than the main market. I think there's some great opportunities, but of course we've still got opportunities basically every day on Forex. Now, if you haven't already subscribed to my YouTube channel, please do. And of course, some of the trade setups I'm about to show you, you can obtain my 12 core day trading setups for $197, close to 6 hours of tuition on video. And so if you want to really fast track your career, this is what I do full-time. I'm a full-time coach and day trader, and in the near future I'll be launching a live day trading room. So if you're interested in that, please also drop me an email. So like more information on my day trading program, please drop me an email and or my room. Now before we go across to the charts, of course I need to put up understanding the risks. There's always risk in trading. Please feel free to stop the YouTube video for a moment and just have a read of that if required. And as we go to these charts, and as I mentioned, we're going to be really looking at the YM today, I just want to talk about my style of trading. My setups will work on any time frame and any market. However, I like to be in and out within a couple of hours, and I also consider myself, and this is a personal mantra or a way of how I trade my style, I like to look at myself as a sniper, because to succeed as a trader you need to be, and I need to be, in the top 5%. We need to be different. We've got the greatest opportunity in the world, traders, of low investment to become a professional trader and unlimited income potential. It's true, we literally have an unlimited income potential. But what it really comes down to is that 95% of traders really don't make money. They either lose their accounts or they lose their money, and there's a whole lot of reasons for that, which of course I've covered in previous videos, and if you've attended one of my seminars or webinars, we talk about it extensively. This is a mantra that I have, and it's in my trade book that I have in front of me when I'm live trading. I believe and think in terms of probabilities, and I know by taking every trade that qualifies and by following my trading rules, the statistics are on my side. No clear trend, no trade. I'm a sniper waiting for a trade setup that fully meets my trade criteria. Traders, to succeed in this business, we need to have patience, discipline, patience, and knowledge. Now, there's one other thing I want to throw in that you also need to have, traders, and it's called competence, because you need to gain screen time and competence, and that is gained over a period of time. My job as a traders coach, of course, is to fast track your success. So let's have a look at a couple of things here on the chart. Now you can see here at the moment, my charting package, by the way, is TradeStation. The setups and indicators you can obtain basically for any charting package nowadays. So I'm not going to give away everything that I do here. My students and my clients, of course, know exactly how everything works, but I'm going to give you some overview because I also want to be able to educate you. I want to turn around the amount of traders that are losing their shirt. Remember, you have to be in the top 5% to succeed. You have to be. So what I've got on the left here is an 89 tick chart, and on the right I've got a 4 range. So a 4 range basically means we need 4 ticks or 4 points to form a candle, and as you can probably see, I like candles over bar charts. It's my preferred methodology now, or preferred type of chart. One great thing about trading the NQ and the YM and Forex as well, most of the Forex, the majors, is because there are so many technically based traders trade those markets. They form the patterns. You see, patterns that appear in the market every day. The market repeats itself. It's all based upon human behavior, and so there's probably, and as we can see here, and let me now expand this screen here for a moment, on this divergence we've got a pivot bounce. There are probably hundreds of traders from the major markets all looking at these form, and of course you then got hundreds of traders will trade these. Now they won't all be trading on the 4 range or the 89 ticks. Some might be on the 133 tick, they could be on a time chart, all that sort of thing. But these in many ways are a self-fulfilling prophecy because of so many technical based traders are trading them, and that makes our job a lot easier. For many traders watching this, you also know I like to look at a higher time frame, or what we call an anchor chart. Now an anchor chart is generally, in my case, I like to see something at least 3 times higher in time, but that can vary. I like if I'm trading a tick chart, I like to look at a 9 range chart on the YM. So it really varies from market to market. We have a trade setup that we call the T18. Now the T18 is when we have an anchor chart or a higher time frame trending in one direction. We have a pullback on the, say here, like in the shorter term direction, and it continues. That's called a T18. They're high probability trades when you see that the shorter time frames are trading in the direction of your higher time frame. But let me just give you some good stuff here, some real good stuff right now. So we can see our classic divergence signals that we've got. Remember, you only start trading divergence when you are already profitable on trend trading, and that's the error with the hundreds of students that I've deal with, and even with the professional traders. Many of them now are banned, blacklisted themselves from ever counter trading, even with a couple of the great setups that we have, because it's so easy, and it's amazing. It's like a not that I take drugs, but people become addicted to counter trend trading, and that's what costs them a small fortune. So let's have a quick look at some trade setups here. Well, we can see here that we've got our 34 EMA, which thousands of traders follow, and the 89, which thousands follow. Once again, getting back to self-fulfilling prophecies, we can see all these pivot bounces 6-7 minutes after the market opened. We have then basically a 34 and an 89 bounce. We're getting some divergence. We have a bounce after midnight, and we can see here our short trades. We've got a T2. We can see over here we had another T2, and then we formed a double top. A double top are just great trades to take. Here though, it's only in the direction at this stage of the 34, and this is an area where traditionally you've got to be very cautious. We have a 200 bounce, but the market is not 100% certain where it's heading, and you can see here, and this is an area where you can be chopped up very easily. Then market falls and we have a nice pivot bounce, a 34 bounce, and of course we've got some lovely divergence. So one of the key messages I want to get across here with today, which I've sort of started to allude to, is just the amount of technical indicators or indications that you can get from a technically based point of view in trading the YM, the NQ, and the ES, of course, but I just think some of these markets are even easier. Nice little double top, sorry, double bottom I should say. Some nice divergence, nice T1, etc. So we just have every day there's these trades firing off non-stop. Now I will point out here, because for me, I had an entry here, I had an entry here, had an entry down here, I've got our entry up here. All winners. I have a target of between $2 and $400 per contract per day. I like to be in and out with my trading. Now in this particular case, this is all over and done with in about an hour and 15 minutes, and you could be finished for the day and very much in the green. Now if that's too much trading for you, all you do is change the time frame. That is, rather than trading say a 4 tick or a 4 range bar, I might increase that to an 8 or a 9, or I might go from an 89 tick to 133 up to 233, etc. Now in successfully trading, one of the greatest challenges is, as I mentioned earlier, is lack of discipline or impatience. You have to wait for these sweet spots. Now this was actually filmed on a Friday, so you'll actually quite often find here on a Friday afternoon that the market starts to go crazy. You can tend to get some very much sideways action, and of course we've got some major problems when this was filmed next week with the Greek debt crisis. So all of these sorts of things can affect your trading. Up here for our experienced traders, we can see we had a beautiful T89 trade. Now another thing I'll say here with this chart, it's also very busy. So if you're a new trader, you may be looking at this and saying, gee whiz, I could never learn all of this. Well, it may initially appear there's a lot on the chart, but the way you learn how to trade is by removing one indicator at a time, and by building your chart. Once you fully understand what they do, it's really quite logical. So we just got a channel here. We had a zero lag, we've got a 34, a 200. So you just trade with what you really need on the chart. But you can see here how powerful a 34 EMA really is. Now let's go back over to our tick chart. Now on the tick chart, notice the size of some of these candles in comparison to a range. Now a range chart, of course, each candle, as mentioned earlier, forms in size with 4 ticks or 4 points in the YM. And you can see here on these tick charts, you can get some really large candles. What we did have here is a lovely double top up here. You had basically almost a double bottom here, some nice bounces off the 200. But the point is, The range chart on the YM is my preferred chart because I tend to find that this can be a little bit messy. However, you still get, as you can see, great trading opportunities, and many other traders disagree. They prefer to trade the tick charts over range. Horses for courses, and we're all different. Once again, beautiful T89 for our traders there. You even had a little T89 over here. We are heading towards the close of the market on Friday. You had a little nice little T89 up here. T89 traders is one of our favorites, or if not the most favorite. You had one right here, counter trend trading strategies. It's a very high probability trading strategy, and you had one right here, you had one right here. And what is very important, of course, when you counter trend trade, you actually had one here that failed, is that when you counter trend trade, is that you've got a great risk reward. That is, for every dollar you risk, you want to have at least a $2 gain. So traders, this is a quick overview on the YM. The YM is a great market. You can trade basically 23 hours a day. During the after hours market, as mentioned earlier, I drop it down to a 55 tick because you just don't get the volume or the market moves, and it's $5 a point. It's a, once again, there's some great trading opportunities every day on this market. Now traders, as mentioned earlier, the big thing is to learn to become a sniper and to learn how to trade correctly. And this is applicable to the traders that are watching this, perhaps that haven't made it. And I tend to find on YouTube, as an example, please, I don't want to offend anyone here at all. I'm just going to state a fact that many traders that look up my videos on YouTube tend to be traders that have struggled or really struggled in the past, and maybe even coming back for a second or third attempt. You have to go back to the drawing board and start and restart your trading career by learning one trade setup. Master that one setup before you move on to another. And what's really important in mastering the art of trading, that you need to have trading strategies that are very rules-based, pattern-based, and mechanical in their nature, because that makes it a lot easier. Just like a pilot checks his checklist each time, pre and post flight, that's what you're doing as a trader, and it really makes it a lot easier. Now many traders have seen my live trading, that is where I record my live trades and they watch me pick up 5 or 6 winning trades in a row, usually fairly quickly. How do I do it? By using rules-based strategies that are easy to learn. So if you've got any questions, traders, please feel free to drop me an email, and please subscribe to my YouTube channel. Thank you.